Mr. Secretary, let me follow up on one of the, I think, very thoughtful insights that Senator Shelby raised in his opening statement and reiterated, and that is part of the FSOC's mission is to understand systemic risks, to try to anticipate growing risk. It would seem to me, from my recollection, that the operational agency most capable of doing it is the Office of Financial Research. If you have an apolitical, analytical organization that are thinking carefully along with their colleagues in academia and on the financial sector, that you'll have a much better chance of doing this. And I would, again, urge you, and you've been doing, I think, a yeoman's work to try to get a nominee up here to do that soon.
Coming, and we've talked about this, and I'm glad that you remind us of the importance of this office. You cannot effectively oversee a financial system without much better information than we had access to before the crisis about where risk is and where it shapes. And one of the key roles of this office is to make sure there's better data available not just to supervisors, but to the markets as a whole, so markets can make better judgments about where risk is. And of course, that won't happen until we have a confirmed director, but we expect to give a nomination to the Senate relatively soon, and we are, of course, not waiting. We're starting to build the institutional capacity and the people, and we've seen extraordinary amount of academic interest and support for this project. And so I'm really quite confident we're going to be able to take advantage of a lot of the best talent in the country to build this.
Well, we need the nomination so then we can go on with the confirmation process. And just in abundance of caution is that, and I think Senator Shelby is exactly right about the need for this type of very thoughtful approach, and I would just regret immensely if that nomination wasn't moved with deliberate speed and we got this office up and running fully. And so the burden is on you initially, and then it becomes on us. And if we are really sincere about the need to get good knowledge and good information, then we'll do it quickly and we'll get it done. Let me change directions just a bit, and again, it's another sort of comment that Senator Shelby made, that one of the most challenging aspects today is trying to regulate the derivatives marketplace. The clearinghouse he talked about, definitions of swaps, definite exemptions, particularly when you get in the era of synthetic derivatives. I mean, I'm still trying to get my hands around good old-fashioned derivatives, and there's a whole another world of synthetic and ex-prime synthetic derivatives. If we cannot effectively sort of deploy these regulations in a timely way, it seems to me the only stopgap for the uncertainty is increased capital levels in those firms that deal extensively with derivatives. Is that the FSOC view too? Because you certainly, through your agencies, have the ability to do that.
That's right, but we are very confident that we were going to be able to put in place a regime, for example, that mandates margin requirements in derivatives, and that combined with these stronger capital buffers and the move to central clearing with stronger safeguards in the clearinghouses, that mix of factors will leave us with a much more stable system than we had. Not immune to any crisis, not immune to any shock, but much more stable than we had. And we're trying to get that balance right. And we are, this is a terribly complicated task, and we are slower than we'd hoped to be, but we're slower because we're trying to err on the side of getting it right and not to rush it. And we want to make sure that we not just get the substance right, but we have the SEC, the CFTC, and the Fed aligned, so we have a better chance of getting London, Frankfurt, Paris, Zurich, Singapore, Hong Kong aligned too, because we can't put ourselves in a situation where this stuff just moves to markets where it's more risk. So we're a little slower than we hoped. It's because we're trying to make sure that we land it sensibly and on a more level playing field.
Well, I concur. I think you have to be careful and deliberate. This isn't very, very complicated, but I think if you reach a point where you cannot pull together all of these very difficult aspects, in an abundance of caution, I think the only remedy is capital.
Use capital. And that's the way the system works. If you have margin and collateral, you don't have to hold as much capital against it. So it works that way. We have that basic safeguard built in.
One of the issues you raised in your testimony is your concern about the reliance on short-term funding by major financial institutions, and with tri-party repos market, money market funds, et cetera, particularly in the wake of the European crisis, which many of their institutions depend, as you point out, more so on short-term money than we did. We learned a very painful lesson in 2008 and 2009. What is FSOC doing in terms of trying to deal with this issue? And this might be in the category, some of my colleagues suggested, what is the biggest new threat approaching us?
Well, very important issue. The Fed and the principal supervisors have been very effective in getting banks to fund themselves much more conservatively. So the reliance on short-term funding in the United States has fallen very dramatically. And in the repo markets and the money market funds, there's been substantial shift towards a more conservative regime in that context. And what the FSOC has done is to ask the competent agencies to lay out a comprehensive plan for improving the basic resiliency of those markets. And we get regular updates on progress against that plan. And because these things matter to the system as a whole, we're trying to make sure that, and the Fed and the SEC are doing a great job, they're the ones in charge of this, they're being very careful and good about making sure they're sharing their judgments with us in advance. And so we try to make sure we're looking at the overall interest of the system, not just the interest of those particular parts of the system.
Mr. Chairman, I'm in the rare circumstance where I am ready to yield, but my colleagues are all voting, so I don't need much more of an invitation to keep asking questions, so bear with me. The housing market is inextricably and inevitably linked to our progress as a nation economically and growth. It is underperforming. Frankly, my impression was that there was a sense a year or so ago that we were turning the corner, but I think there's another corner. And until, from my view, until we stabilize housing prices, begin to deal with the foreclosure issues, we're not going to have the foundation. I mean, that's certainly the perception on Main Street. When you see your neighbor's house, the grass has been cut in 2 months, and they've been foreclosed, that's a daily reminder that things are terrible. And then, so, FSOC, this is a systemic issue. You've got to provide the leadership, and I can ask you, what are you doing? And both in terms of the programs that are in place now, but the next steps, because we haven't done enough.
Senator, I agree with you that things are still terrible, and this is going to take, it's going to take years still. And what you see now is two things. You see the broader weakness in the economy, unemployment above 9%, income growth slower. That's putting additional pressure on the housing market as a whole, hurting housing demand, slowing the pace, making more people vulnerable, losing their homes. But even apart from that, we still have this a foreclosure process essentially broken, a servicing framework that is not doing a good enough job of helping people stay in their home or transition to other forms of housing. And we are doing as much as we can with the authority we have to help people caught up in this crisis still. And you're right to say it's still terrible. I think the most important things we can do now, apart from trying to do anything we can to make the economy stronger, is to help more people refinance, even people underwater, to help transition more of the empty, vacant properties that exist across the country into rental housing, making financing more available to those, which is we're working on too. But we need to continue to make sure that as many people as we can have a chance to stay in their home if they can afford to. And we need to see banks and servicers and everybody do a much better job, more aggressive job of reaching out to them and trying to make that possible. As you know, I can't comment on the details of this, but there's a very complicated effort to try to bring to earth a global settlement of the legal problems in the foreclosure process. And if that's done well and sensibly, that could make a big difference too.
Just to comment, Mr. Secretary, your efforts and your colleagues' efforts have been intensive and extensive, but we don't have years.
But disappointing.
Yes, and we don't have years. And if the tools that you have in the toolbox are, will help us a bit to get this problem fixed in 2 or 3 years, then we've got to get new tools. We've got to think beyond the traditional, and we've got to do it. I will rest my case there. Since there are no of my colleagues from our Republican side, I'm going to ask Senator Bennett to chair the hearing and to questions, and then to recognize the first Republican that returns.
Senator, could I mention one quick thing on
Yes.
housing? I forgot to mention. This is important. You're right to say if we need more authority, we should ask for it. And one of the pieces of the American Jobs Act is a proposal to provide substantial more resources into neighborhoods most affected by the foreclosure crisis. That's expensive, but we can afford it, and it's a good use of scarce resources.
I concur.